Hi, fellow traders. I hope you guys are ready for the vacation. I know I am. I'm anxiously awaiting the market to close so I can get packed and get ready to head down to Charleston so we can watch some fireworks tomorrow. But normally on Wednesdays, we have the Roadmap to Success series. We usually do it after market. Well, the market closes early today. Everybody's kind of taking off. So I'm going to do the video now, and I'm going to post it on YouTube as kind of a 4th of July gift so you can kind of get an idea of what we do if you're not a member. And this may be a subject that is of interest to you because we're going to talk about summertime trading today. So for you members, this will still be posted on the member website, so you'll be able to access it with everything else. But just gonna make this one public today to give everybody an idea of what we do. Now, yesterday I shared with you our 4th of July special, the annual special. In this lifetime membership, this was inspired by some members. A lot of what I do is in response to member requests and ideas I get from them. These guys said, I'm tired of paying a subscription fee. Do you have something that will allow me to just make one payment and I could just stay with you forever? And so the lifetime membership was born. It's normally $12.99. For the 4th of July, it's $500 off. And it's a lifetime membership. You will never have to pay another dime for anything as long as you're a member. You don't have to, well, you'll never not be a member. So that doesn't even make any sense. You get one mentoring session a month that you could break it up. There's some of these guys will do 15 minutes a week, or we'll do 30 minutes this week and maybe 30 minutes 2 weeks from now, or they'll break it up 30, 15, 15, however they want to do it. You'll have one mentor session a month. And a lot of times within that month, something's not going to go right, and you're going to need to talk it through. You're going to need to work it through. So you don't have to ever worry about making money to pay for a subscription. When is it going to come? Like I said, I'm doing away with subscriptions. It's just membership. The only recurring payment is going to be the monthly. If you sign up for a monthly, that'll be on recurring payment. The rest of this stuff is just a headache, and it's easier just to do it this way. So if you're interested, you can go to this link up here, go to the website and click on the picture. You'll get to the specials page and you'll be able to see exactly what it entails. But it's all inclusive, so you'll never have to buy anything again. All right, so today we're going to talk about navigating the summer months. All right. Now, June officially marks the arrival of what we feel is the dreaded summertime trading. Now, this time period, June, July, and August, is a lot of times it's dreaded by most traders because the trading ranges shrink, the volume shrinks, momentum slows down, and it's harder to make money. And those of us that have, just this year, if you've been with me since January, you've seen the month of June where things just really started to slow down. And it's harder to make money in the market. So this time period is really tough for newer and inexperienced stock traders. Now, the reason why we feel the volatility in the volume goes down is because a lot of big time traders, they're on vacation. They may not all go on vacation at the same time, but this is typically when a lot of traders take vacation. Now, if you're really rich, you can take 2 weeks off. You can take a month off. Some take the whole summer off. But there's no denying that the volume during the summertime is lower. So as a result, stock prices fluctuate. That's what we call chop. And it creates a lot of stress in our trading that we experience it sporadically throughout the year, but in the summer, it really seems to come every day. So, and just to give you an idea of what we're talking about, here's a trade I'm in today. And now I thought I was being smart. Every day, this stock has gone up or gone down or whatever. It's gone up, had the fake move up, and then it started to sell off. So I thought I was going to be smart today and wait. And you can see this is the type stress in the chop that we have to deal with. This chart is just blown up a little bit, but if it was normal, you would see it would look like a tighter range. And even though I was a little bit late getting in this, because I was flipping from chart to chart, this thing washed out real quick. I had to wait for this candle to close and then get in using the more conservative entry on this, which puts me away, a good distance away from the technical. So all I could do is use my max loss risk on this. So I sold out, I got in and was looking for the 200. There's no reason why this stock should not have been able to get here. This line was not drawn. I didn't draw this line until after this move got put in. There was nothing between where we were and the 200. And this thing came within 2 cents of my target. And it never came back close again. I had it set because a lot of times these will rip down, hit the mark, and then bounce back up. And it's not there long enough for you to do a manual order or hit a hot key or hot button or anything like that. So you have your bid sitting out waiting for it to get hit, or your order sitting out waiting for it to get hit. Well, this never hit. And I thought I gave it enough room before it got to the 200. So in case it didn't get there, but I guess my thing was off. But this is the frustrating part about summer trading that we deal with. And then now we look like we're establishing over the moving averages. I get in, I'm buying it off. This is a solid green candle when I get in. And then as soon as I get in, it starts to sell again. Now I still think we're going to push back up and make another run back up toward 94. I think this is just washing out weak suckers like it's always been doing. But the point I'm trying to make is this is the source of a lot of stress, and this happens almost every day. Okay, case in point. This is Monday. Okay, look at, we get in, we pop up, and then we sell off, and then we sell off the rest of the day. So here we're dealing with all of this chop. And finally we break out of the range, it sells off, and then we sell off again. We're just sitting here waiting and watching this chop. And this creates stress if you're sitting here watching this and living and dying on each candle. We can't do that. We can't do this during the summer. We set our targets and we find something else to do while this is moving. Let's watch other stocks. You could read, do whatever. But if you sit here and you watch all this stuff, especially in the summertime, this will cause you to make bad trades, bad decisions. You end up taking this off early. There were a lot of people who took this and stopped out here. It's just so choppy, it stopped out here. Or they held through this and they stopped out here because they were just tired of watching this. So Summertime you have to really focus. Now this does happen throughout the rest of the year, but it seems to happen more in the summer because of the lower volume and the lower volatility. And then here was yesterday. Here's the frustration I dealt with yesterday. Okay, here this time it sold short, it faked short, and then it went long. But look at the chop. We had some nice moves up, but it would chop around a little bit, and this just chopped its way up. So this could be a little frustrating, especially if this is the first profitable trade of the day. If you got stopped out of this and this is your first profitable trade, it just brings stress. So I don't understand why some people say summertime trading really doesn't exist anymore. Because you have computers and automated trading, it continues to go. That this trading activity is dominated by the hedge fund managers and all of this. Here's the thing. Their primary objective is what they call capturing alpha for the day after day, week after week. And these results have to get reported to their clients. But how do these people get paid? They get paid when they make trades. They get commissions on all the moves that they make. So now I know they get rated and they may get bonuses based on what they make, but that doesn't mean that there's not summertime trading. So people will say, okay, there's no way they can scale this back during the summer. They can't take off. They got to keep going. That's not everybody in the market. That's not everybody in the market. The market needs retail traders to come in and help move some of this price. Because if you had computers trading against each other, the stock would move 2 or 3 cents all day long. And there's some stocks, I should have found one and showed you what it looks like. But if that was the case, there'd be very little movement. So the fact that a lot of retail traders still take off during the summer, and even though you have these computers trading, that's not going to help the volatility any. Because remember, the volatility in the market is really generated by human emotion. It's human emotion that actually generates this stuff. It's people have convictions based on their emotions and they trade it, or they overreact when they see something. The people that don't really have control over their reactions and their emotions, all of these things happen. But during the summer, you have less players, so this is not going to move as much. So therefore, my belief is that there is a change in the market during summer months. And it starts, you've got Memorial Day weekend, you just to kick the summer off. You got the 4th of July in the middle of the summer. You got Labor Day to wrap up the summer. And in between, everybody's taking vacations. So when the kids are out of school, if you're a teacher, you're out of school, this is the time to vacate. And some of these guys, their wives may be teachers or whatever, their kids get out of school, this is the time to go out there. So this happens, and I see it happening over and over and over again. Now this week, this is the first time that I've been actively sitting at my trading desk in 4 years for this week of 4th of July. I've always been on vacation, and the last 2 years I was on vacation. I would log in the morning, bring up the scans, and I might trade the first 30 minutes, and then I'm gone. I'm not even fooling around in the market because I know this is the slowest week of the year. very few earnings are being reported, not a whole lot happening. So this happens over and over again. That's why I said the market tends to repeat certain seasonal trends, because it happens over and over and over again. And these seasonal trends will affect individual stocks and the stock markets as a whole. It has low volatility in terms of overall market and the low volumes. Now, a stock on low volume, an individual stock, can have high volatility because it can jump around because it has low volume, and you can have these big spreads and big price movements. So it can be really volatile on low volumes. But overall, the market as a whole has low volatility, and they're more unpredictable. You're more likely to see shorter term trends and a lot of false signals. A lot of false signals. And if we're chasing false signals all day, we're gonna rack up some losses. So I feel when traders have a thorough understanding of the trend during this time of the year, this seasonal trend, you're able to gain an advantage when it comes to summertime trading, because you can adapt your trading to the movement in the market. So summer months can be challenging for new and inexperienced traders. There's no doubt about that. The solid opportunities, the easier trending type trades become fewer and farther between, which causes this toxic syndrome that can be fatal for new and inexperienced traders. It's called overtrading. We all know what that is. We all know what it feels like. We feel like we just have to take a trade. We don't have a go-to strategy, and we get bored. And then we fall into that social media and chat room noise trap. It's like somebody's saying, oh, this stock is moving. They probably heard it somewhere else, and they post it, and by the time you get it and you look at it, you chase a move, and it's done. And it starts to go the other way on you, and you're sitting here trying to figure out what the hell happened. Why me? Why is the market against me? It's not that. It's just the fact that that's the way this market trades. And if you don't understand that, you're going to lose a lot of money. So we can combat overtrading just by understanding that we don't have to take a trade. Just because we're sitting in the market doesn't mean we have to take a trade. Now, I would take off work. I would call in sick to stay home to trade. And I would force myself to take a trade because I was like, I'm not wasting this sick day I took. I want to trade. I took it off just so I could trade. And that mentality caused me to lose every day I took off. And in spring break, I felt I had to take trades. I couldn't just sit here and waste time. During the summer, when I was off in the summer, I felt like I had to take trades. And that mindset, coupled with the summertime lull, was a devastating thing. So the first 2 months I did that, I'm thinking I'm going to trade this summer and I'm make enough money to where I don't have to go back to school in the fall. And every time I set myself up for failure because I was forcing trades. I felt like if I'm sitting here, this is my time, I have to take a trade. But you don't. You've got to have a go-to strategy, and you have to respect that strategy. If it sets up, take it. If it doesn't, you move on. If you get bored, get a hobby. Do something different. Don't take a trade just because you're bored and you want to see what happens. That's another way to lose money. Even if you do it in the simulator and you don't have any, you're not doing any type guided practice. You're just playing around with no rhyme or reason. That's going to cause you to develop bad habits, and you bring that to the live market, it doesn't work. So we have to be concerned with overtrading and not jumping on everything we see. That's why I tend to try to stick with the 2 or 3 stocks that's on my watch. And if I latch hold of one, I tend to stick to it if it's paying me. Keeps me out of trouble. So low volume and volatility, it equals a choppy market. But it should be low volume and high volatility is what it boils down to. I left out high volatility because, to be honest with you, low volume can create highly volatile situations where the spreads are huge. Where if you try to get in a stock that has a $1.50 spread, as soon as you get in, you're going to be down $150. Now, if you're going long and you buy on the bid and the ask is $1.50 away, you buy on the ask, you buy on the ask and the bid is $1.50 away, you're going to be down $150 if you went in 100 shares. And if you short and you short on the bid and the bid is $1.50 lower than the ask, the minute you go in, you're going to be down $150. And the stock can jump. I don't know if you've seen these stocks on really low volume. They have these huge spreads where the spread can be 10 cents and then 2 seconds later it's $1. That's the type volatility that I'm talking about. And these stocks we watch, they'll break out of the 5-minute opening range because that's what we use. And a lot of times it doesn't give much follow through after that. Every now and then we'll get one that'll hit our first target, but then it comes back. And so the price action moves in our direction sometimes and not quite enough for us to take profit. Just like today. It moved in my direction, but it just barely missed me being able to take profit. And after 10 o'clock, you tend to see a lot of choppiness, a lot of sideways action once those big moves at the open are done. And they'll trade above and below, through the moving averages, through VWAP, just above it, then back down below it, and then just above it. You know who's moving that. Retail traders aren't moving it through, above, below, back above. That's not who's moving it. So they're moving it, creating false breakdowns, false breakouts over the moving averages and just sucking people in. And if you get caught into that, you're going to drain your account pretty quick. So only a few stocks will be moving that have a strong enough catalyst that's going to attract enough attention to have steady volume and smooth price action for a sustained period of time. So most new and inexperienced traders, they should shut down their live trading at lunchtime. Now, until you're really, really confident and you're really consistently profitable trading in the morning, I would shut it down. Now, you could trade in the simulator after lunch, but make sure that you are actually focused on trading, that you're not just playing around and trying this and trying that, that what you do is focused. We also have breaking news and earnings trades that we see after lunch, and usually that happens later in the day. So there's opportunities, but they're fewer and further between, and you have to really focus on these, and you have to have your mindset in the right place. Now, with all that said, I feel summertime is the best time to learn, because the best learning is by doing. And by dealing with some of the hardest market conditions that a small account trader can face, in a sense, you'll be baptized by fire. And when you come out, you're going to be hardened. I don't know how many of you guys watch on Forged in Fire. I love that show. And when they go to harden the blade, they have to, put it in the forge and heat it up. It has to go through intense heat. It has to, so much heat that the molecules in the metal move. And then once it's been through the fire, it's hardened. It's developed the hardness, and it becomes practically indestructible. That's what has to happen to you as a new trader. You're going to go through that fire. You're going to develop that hardness, and you can be indestructible as long as you continue to follow your rules every day and be consistent applying your trading strategy day in and day out. Now, to be a successful day trader, you have to develop patience and discipline, because trading opportunities are fewer and farther between during the summer months, like we talked about. It's important that you are able to capitalize on the opportunities that do appear. And one of the things that you heard me be critical about myself last week, especially, is missing the big opportunities, not being in the right place, not being in the right mindset so that I can take advantage of these when they come. So we call it mindful patience and mindful discipline. Mindful patience and mindful discipline. Because what we have to do is we have to be patient, but we have to be in a mental state that's going to allow us to react when opportunities present themselves. But as far as the discipline part, we have to set limits, and we have to have the right balance between sticking to those limits and having the freedom to trade the market. Because sometimes things are not going to be exactly perfect. They're not going to look 100% perfect. So we've got to have that balance to where we're able to make a decision on whether we want to take this trade or not. How does the market feel? What's the market doing? We track the SPY all day, so what's the SPY doing? If we're looking to go long and the SPY is starting to sell off, do we want to take the trade? So we want to have the freedom, but we've got to be responsible. And we have to respect our limits, respect the goals and the limits that we put on ourselves. But the only person that can enforce it is us. Now, we have a finite amount of mental energy that we can use every day. Once we spend it, and if we exert all of our mental energy because we were stressed out on our first trade, then the only way we're going to get it back, the only way we're going to be able to recharge is to take a nap. That's how we build up our mental energy. We can sit down, or we can, try and, not think about this and not think about that. But the only way to recharge our minds is to really take a nap. And you see a lot of these tech companies, these high-strung tech companies, they have nap pods. They have places where employees can go take a quick power nap, because they know to stay sharp and to stay on top of your game and to stay focused, you got to keep your mind in tune. And taking a nap is really the only way to recharge it. And the science is definitive on this. So, to sum it up, we're going to just kind of talk about how we can manage our risk and the things that we need to do during the summer to help ensure that we can to ensure that we could be successful during the summer. So even just not the summer, not just in the summertime, but throughout the whole year, you definitely want to establish a max loss for the day and a max number of losses that you'll take in a row. But if you don't do that during the year, you especially need to do that during the summertime, because the summer, and with you get caught up in a day where nothing is moving and everything is range bound, you can take 20 trades and not make $1. And at the end of the day, your commissions are going to eat you alive. So you want to have a rule that is going to establish a max loss for you, and also the max number of losing trades you're going to take. Now, you can call your broker and have them set a lock so that, let's say if you lose $300, you can't trade anymore unless you call and have them unlock your account. So all funds, the mutual funds, investment banks, they're traders. They have this. If they lose so much money that day, they're done. They're locked out. And these guys get locked out too many times, they're going to be locked out the building. They won't have a job. So we need to have that same type of mentality going in. If you get locked out of your account every day for 2 weeks, if you still have money in there, you need to take it out and go do something else and try to figure out why you can't do this the right way. Because evidently you're not listening and you're unwilling to put into practice what everybody's teaching you. So if you're not teachable, it's time to walk away. Save your money. It's not, don't hold your head in shame, because not everybody has the ability or the desire to manage themselves and develop themselves into who they need to be so that they can be a consistent trader. So the most important aspect of summertime trading is not just managing your winners and letting them run, because you need to have to do that too. But you have to manage your risk. It's the only way this thing is going to work. Also, you want to maintain your position size. That one time I used to say reduce your position size, but this is summertime. You're not going to get the moves that you normally get. So you want to maintain your position size. So don't limit the number of shares you're going to take on any given trade, because the moves probably aren't going to be as big as they would any other time of the year. So you need your position size, especially if you're a smaller account. And this is in the mindset of trading a smaller account. Now, obviously, if you're in a larger account and you're trading a lot of share size, then you're going to want to reduce it. But we're in a small account. We don't trade any more than 300 to 500 shares anyway. We cannot limit it, because if we do, we probably won't be making any profit. And this is key. Make sure you take profit when you have it. This will help relieve a lot of stress. Now, before you take profit when you're in a trade, if the trade is chopping around, if it goes up, comes down, goes up, comes down, and you're just going up and down with the every tick, number one, you shouldn't be doing that, because one trade should not make or break you. But you want to make sure you're able to take profit, and you have that profit target locked in, so that when it hits it, you're going to take it. And we have to scale out when opportunity exists. That's where we make money. Now, we can adjust our scale out to where, like on my first target, I always take half off. In the summer, I need to take 2/3 off. On the first target, take 2/3 off. and then wait, see if we're gonna get the big move. And then if I want to split that, let's say if I'm in 300 shares, I'll take 200 off. And if it seems feasible to split 50 and 50, then that's what I'll do. All right. Be patient. So you have to trust your technicals. You have to trust the setup. If you don't have trust in your setup, you don't have trust in the technicals, there's no way you'll be able to make money, because you'll never be able to let the trade work. You'll be taking it off, letting it stop out, but then you won't let the winners run, because the minute it comes back on you, you're going to be taking it off. So we can't have that. So these are the things that we're going to be working on and that we're going to be focusing on in the community all through this summer. Is going to help you develop that mindful patience and that mindful discipline that you're going to need, so that when the market starts to pick up and we're getting these larger, solid trend following moves, you're going to be in a position to take full advantage of it. You're not going to keep shortchanging yourself, taking it off when you get a little bounce or a little pullback, depending on which direction you're trading. You won't be spooked out. And hopefully you're not still watching your P&L. Because if you're not making money and you're not profitable in the long, overall, then and you're watching your P&L, it's not going to work. It's going to cause you to make bad decisions. Take money off too early, take trades off too early, and you won't be consistent, and it's going to be very difficult for you to make money. All right, so that's it. That's what I have for you guys today. Like I said, this is typically what we do. There's question and answers as part of it, but I'm recording it now because I won't be live later on. But I hope you guys enjoyed. I hope you can get something from it. Probably maybe Sunday, or if not Sunday, Monday, I'll recap this week. I won't worry about doing it on this weekend. I don't even know. We're going to come in Friday. We'll take a look at the market and we'll see, what we have in the market and if it's going to offer us anything Friday or not. So we're not going to write Friday off yet. But we'll see. Just depends on what it looks like. So you guys enjoy the rest of your day. Enjoy your holiday. And we'll talk to you on Friday.